Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, this is Market Update Monday.
Yes.
Every Monday, we do an update to the Las Vegas real estate market. So if this is the first time you're watching, you got to subscribe so that every Monday you get a market update. We very granular, very specific information. We cover the same stuff. You can see the change every week.
Right, and you can hit the notification bell, and then you will be sure to get notified when we put out another video.
Okay, let's start with the first slide. Okay, over here, you can see this thing called the Market Action Index. That is basically how hot the market is. 47 is a strong seller's market. I've got another chart I'm going to show you a little bit, which is a graph. The market's actually getting hotter, which is highly unusual because this time of year the market is cooling substantially, especially compared to the last few years. Anecdotally, Wanda, what are you seeing out there?
No inventory.
Okay.
Just
Even
no
high end, we're
inventory.
talking multi-million-dollar homes.
Yeah, so just no inventory. It's really interesting. I mean, we're just seeing a lot more demand than we're seeing homes, and it doesn't really matter on the price point.
Yeah. Okay. All right. We're going to jump over to this real-time market profile. This is weekly data. So this is, as you see those little changes, that's just every week as it bounces around. Median list price about 570. It was 470 last, I think, October, November. So the median list price is up 100,000. You'll see that in another chart. I think this is another shocking one. In April, the median price the price per square foot was 253. Is 259. Normally, April's the peak, right?
Right. So Zillow did this whole big to-do about for this year. I think it was something like April 12th or something like that. It was like the Goldilocks moment to sell your house.
The 13th.
I'm sorry, 13th.
It was the 13th because it was on a Thursday.
Okay.
That was the best day you could have sold your house.
Okay.
And it turns out you would have got more money if you sold your house now versus in April, which is really unusual.
Yes.
Average days on the market is down, and inventory, we got a whole chart to show inventory, but 2,200 houses for sale in Las Vegas is exceptionally low. We have over 400,000 in Vegas,
Right.
not counting all of Clark County, Henderson, North Las Vegas, and everything.
Right.
So this is a shockingly low number. Yeah.
And I think this isn't just Las Vegas. I think this is across the country. But obviously this is our market update for Las Vegas. So if you're watching from another part of the country, be sure that you put in the comments what's going on in your market compared to us, because we'd like to know.
Okay. So this is the Market Action Index. What's interesting about this is that generic numbers. It just says how hot the market is. Okay. And it takes into a bunch of factors. It's not just price. It includes, how fast homes sell, etc. You can see those two humps. Those were the hot parts of early 2021 and 2022 when homes literally sold. I think a quarter of all homes sold the first day they were on the market, right? Remember that?
Right. So, we were in this situation where we would put the homes in coming soon, and then before they were actually available for sale, they would already be under contract because people were making offers sight unseen, and they were closing on them. That they weren't just taking them off the market to peruse them and then cancel. Most of them were closing.
What's interesting about this chart is if you look at the round blue dots, the one all the way to the right is today, and then the other ones is the exact day a year ago. So if you go back to the one to the left, which is at the bottom of where it looked like it fell, that was today a year ago, 2022, when after the interest rates, the full effect of interest rates were starting to feel that, a lot of inventory coming up. But you can see since then it's increasing, and this is shocking because nowhere else on this in other years was the market getting hotter this time of year. I mean, you go all the way to the left, it stayed at 40, and then it was just going kind of sideways. And then you could even see 2021, it was cooling, it was trending down. It had bottomed already last year. The market action index had bottomed. And here we, in the high 30s. And here we are. You can look all the way to the right. You can see that thing is shooting up. Like the market all of a sudden decided to get hot. This is kind of weird for this time of year, right?
It is, but I think a lot of this is because we're dealing with such a low number of transactions, any activity has an outsized impact on all of this data. Kind of like, think about it this way: if you have 100 transactions and there's any kind of movement with 2 of them, you have some impact, right? But if you have 10 transactions and there's movement with 2 of them, now you have a much bigger statistical picture, and that's kind of what this is about. We're just looking at so few transactions that any activity has an outsized impact.
Okay. This next one's median list price. If you look all the way to the left, you'll see that was sort of a couple years of the last, when the normal market ended, until 2020, when it got hot. What's interesting is the same day, if you go back 5 years, the median list price is higher every year, including this year substantially more than this time last year. Now you see there was that little peak in 2022, which was that a bunch of people trying to capitalize on interest rates before they passed 5%, right? There were still 4% rates in the spring.
Right. But, the interest rates now, they're kind of, you and I were having a discussion a little while ago about the interest rates.
Yeah.
And they're kind of in this funny spot where it's like, okay, I understand that interest rates are 7%, give or take. But you can put money in a money market and get 5%. So really the cost of money is only 2%.
Right. If you can invest money risk-free at 5%, a 7% mortgage is not unheard of.
Right.
Because why would the bank give you a loan on a risky asset, buying a house, at 4%, when they could go buy treasuries and pay themselves even more money?
Right. So it's an interesting thing to think about as to why interest rates are what they are, and the true cost of the money versus a much safer investment like putting it in a money market at 5%.
Yeah. Okay, here's price per square foot. This is the closer, better accurate of actual values. Remember, median list price can be skewed if more higher end or lower end properties are selling. That's why it's that appear to be more volatile. This is a much better representation of what homes are selling for. Remember, this is just in Vegas. If we had one of these nationwide, we just did this report the other day, home prices are up year over year. Matter of fact, home prices at no point since about 2012 have dropped year over year, but based on an index. They only did if you use median, but CoreLogic did this thing where they indexed home prices, and they're predicting, I think, 5 or 6% appreciation in the next 12 months?
Yeah, something like that. I think it was 5 and change, yeah.
5 and change. Okay, here it is. This is the thing that is shocking. This is the inventory level. This is only single-family homes in Las Vegas. This does include townhomes, okay? You can see, if you go all the way back to the left, 2019, that was the last normal market. As you can see this, except for last year where inventory kind of increased, inventory is incredibly low. It's actually lower now than it was in 2021 on the same day. But here's one of the thing about this chart. Every other year on this day, inventory was either increasing rapidly or had peaked. And then a couple months later, October, November, it starts to decline, right? Well, you could see what's happening here with inventory. It's bottoming out. So it's likely potentially to creep up for 2 months. Where does it go when the buyers come back? Because this isn't like, if you look at last year, we said back in June of last year, the best time to buy in Vegas would be October to January, which is where you had all the inventory, that we sort of nailed that, right? I can't say that this year. I don't think it's going to be a great time to buy. I don't think there's going to be inventory from October to December.
No, I don't see inventory coming back for a long time, just because it's going to be a while before people kind of figure out how to deal with this environment, right? Where if you're a seller, you're sitting there going, well, I'm not giving up my 3% loan, but I do want to buy something, and there's nothing for me to buy. So there's this, chicken and egg situation. So I think it's going to take a while for this to kind of shake itself out. And I don't really see a good way out of this.
Right.
Sorry.
But Okay, but what about the problem is you have a lot of people. We know in Vegas about half of all homes are free and clear. It's 42% nationwide, but in Vegas it's half. A lot of those people are not really selling. Remember, we're talking free and clear. We're not talking about most of the other 50% have less than 4%, 4 or 5%.
Right.
You do have some people who bought recently who have higher percentage, but because they've put money down and home prices are up, they have even more equity they had when they bought the house. So the foreclosure risk in Vegas, the rate of foreclosures, is the lowest we've ever seen. And we've been tracking this for 20 years.
Right, and it's that way across the country, not just in Vegas, because everybody participated in all of this.
So what's it going to take if there's no foreclosures, if there's no bad lending, all the things that caused the housing market to crash before? Affordability's high, but I mean, what's going to cause? We need more properties, right? So what's going to cause more houses to come on the market?
Short term, not a whole lot. I mean, builders are building, but they're not overbuilding. So short term, like I said, I don't really see a lot of inventory coming on the market. I know that there are people out there who think that the economy is in a different condition that what numbers support, and they feel that there are people who are financially distressed and will put their homes on the market, and that very well may be, but even with that would be very few people, and it still does not even touch the amount of demand out there.
It takes over 3 years to foreclose on a house. 90-day lates are the lowest they've ever been, ever. And I think they started recording these in the late 50s. The best thing that could happen for the housing market would be a pretty bad recession, because the Fed would basically undo all the interest rate increases. We go back to zero. There'd be free money again, and everyone could go out and basically get a house for 3% again.
So I disagree.
Okay.
I think that even if we do have a recession, I don't think the Fed would unwind the rate increases, not enough to make the difference that you're proposing.
Okay, what do you think they bring them down to? Where do you think mortgage rates end up? Do you think they bring them back enough to get mortgage rates down to 5?
No.
What do you think they're just going to let it? They're just going to let it
I think
grind.
Yeah, I think they're going to let it grind. I think that they've learned their lesson as far as not taking swift enough action regarding inflation. I think the Fed is far more concerned about inflation than the Fed is concerned about recession. I think that the economy is sufficiently robust to, even if there is a recession at some point, unless there's something else that contributes to it, we'll bounce right out of it, and the Fed is going to let that ride. I don't think the Fed is going to knee-jerk if there is a recession.
But what about all the money the Fed pumped into the economy through quantitative easing? It's kind of their fault, because they probably 9 months more than they should have.
Yes.
They were buying bonds and pushing that market out into the printing money and pushing it back out into the economy.
And they don't want to repeat that. That's the point of this.
Okay.
They don't want a repeat of that. So, if we have a recession, then we have a recession. We're going to have to take our lumps and work our way out of it. The Fed is not going to give us a boost.
Does a recession nationally mean potentially Vegas, which is a leisure destination? How does it? Let's say we have a recession nationally. There's still going to be some industries we know do really well, like travel and leisure is growing at 15% a year.
Right.
So how does that figure for Vegas? And so answer that first, then I'll ask you the second question.
Well, so Vegas is kind of a unique duck, right? Because Vegas is a draw worldwide. So nationally, Americans are still reeling from their pajama days, and they want to travel, they want to live life to the fullest, and what better place to do that than Las Vegas? But then Las Vegas also has a lot of international tourism. We have a lot of special events that draw people in, whether it's for leisure or for business. So Las Vegas is in a unique position that way as far as leisure and travel. So I don't expect that a recession would impact Las Vegas, particularly if it's not a protracted recession. And the other thing is that when there is a recession, Las Vegas tends to do really well.
Yeah. People
tend to kind of throw caution to the wind and go to Vegas and forget their troubles. So Vegas tends to do well regardless.
There's a bad recession. and a bunch of people who bought their house 5 years ago who have a sub 3% interest rate,
Mm-hmm.
paying nothing on their mortgage, they actually have less incentive to sell because,
Well,
right?
not only do they have less incentive to sell, but remember, the banks have all kinds of programs to help them stay in their home.
Okay.
So, so for example, if you have an FHA loan and you've lost your job, you call the servicer and say, "Hey, you know what? I've lost my job." That servicer has all kinds of tools to help you stay in the home. They'll do a loan modification. They will bend over backwards to help you stay in the home. Look, the banks learned their lesson during the Great Recession that foreclosure is not only bad optics politically, but it is also not profitable. They have learned that most people can and do catch up, and they just need a little bit of help, and that is more profitable for the bank.
I think so.
The other thing is, don't count on these people to bring homes to market to sell them or as a foreclosure, because like I said, the banks will help them out, and these people will stay in their homes because of the loan modifications that either pause their payments for a while or lengthen the repayment and drop their payments further, or whatever loan arrangement is made. So it makes it even less likely that in future downturns, these people will sell their property. So think about that. Think about this for a moment. If you have a $1,200 mortgage payment and you are having difficulty and the bank makes an arrangement with you and now your $1,200 mortgage payment is now, let's say, $1,000 a month. Okay, you're never giving that up because this is you're never going to see a $1,000 mortgage payment for that kind of property again. So the more modifications get done, the more of these things happen, the less likely is that those homes will see the market.
All of the foreclosures are happening right now, which is very almost none. Mm-hmm. They started their delinquency before the pandemic?
Right. And for the most part, the foreclosures that we're seeing are foreclosures that are due to
like a death or some other thing.
Yeah,
they're not economically driven.
Right, they're not economically driven at all. They just have to do with more with abandonment than anything else.
Yeah.
So anyway, that's what's going on in Vegas. What is going on where you are? Tell us where you're watching from. Tell us what's happening in your market. Please remember to like the video, subscribe, hit the notification bell, share the video, and we'll see you on the next video. Bye.
Bye.